As we're going into a slowing economy, you're going to want to get creative and find ways to get deals done. And something you want to consider is seller financing. And many of you know this guy. George is the CEO of Commercial Brokers International. He's been on quite a few videos. Matter of fact, you might as well pull up a cot.
I've thought about that, but, as much as I like it, not as comfortable.
Yeah, no doubt.
My own bedroom.
Seller financing is something you want to look at. George is going to give us a top 5 ways that you can approach a seller about doing seller financing. So, George, where are we going to start? What's number 1?
Well, number 1 is actually, it sounds simple, but often overlooked. Make sure it's a seller that can give seller financing.
Oh, they have it to give.
Exactly. And what I mean by that is just because a seller is selling a property doesn't mean that they're going to get all that sales price back in equity. They may already have a loan on the property, or they may have purchased the property, or they may be trying to sell the property at a much higher inflated price, offering seller financing and not really have any equity, but just looking at it potentially as a loan to own.
Right.
Basically, give the loan, take back the property because it ends up failing, but they have your down payment that you put down.
So you just ask the seller, how much equity do you have?
No. You're going to want to actually take a look and negotiate, have your broker and do an analysis, determine what the value of the property is. Then you can actually, through public records, determine whether or not there's financing that's been placed on the property. Even if there is financing, though, they still may be able to do it. And you can always talk to the seller as well. Next.
Number 2.
We talk about, number 2, the term, the length of it. Now, what you have to remember is that most sellers are not in the debt business. They're not lenders. Okay? They're in the ownership of property business. The only reason that they are considering giving a loan is because they know this property, they've worked with this property, they know that the property has performed very well for them and can sustain the price and the loan that they're willing to give on it.
Yep.
So take into consideration that since they're not a bank or a credit union or an insurance company, they're not going to give you a 10-year loan typically.
Yeah.
Generally speaking, they're going to do this as a short-term conveyance to help sell the property and help you through a time when debt is tight.
It's going to be a little higher rate though too, right?
You know what? Yes and no. I think it really depends on the seller a lot of times. Sometimes the seller may ask for higher rates, but if they're getting the price that they want, and let's say they're selling a property at a 5 cap, and right now current interest rates for most commercial properties are in the 6, unless they're credit rated tenants, are right now in the 6 to 6.5 range. And so if they're getting a 5% return on the property, they may be willing to give you a 5% loan. And keep that return the same. It's all negotiable, absolutely. So this is what you want to look at. More importantly, you can also make an interest-only loan. That's what we're talking about here now.
Okay.
On the negotiation.
That's number 3.
And number 3, interest-only. So you can actually go in and have the entire term interest-only. So this way, even if it is a higher interest rate that you talked about, because risk versus reward, of course, even if it is a higher interest rate, your payments will still be potentially lower than a fully amortizing loan or a loan that's been under an amortization schedule. So take a look at that. Interest only. Do it for a 2-3 year period. It's negotiable.
Well, you got to remember though, the seller might be able to, the rate that you give them might be higher than what they're going to get in the bank or another investment. So,
absolutely, exactly.
Really do your due diligence before you pitch this.
Exactly. They may end up wanting to put it in the bank, and they're only going to get 3% nowadays, if that.
Yep.
And so taking that in consideration, but also realize when you're buying a property, if you're going for an interest-only loan, make sure that you have the right to pay down that note at any time as well and take advantage of some things that may come up. So there should be no prepayment penalty. And the reason why I say that is you also want to be in a situation where, or you don't want to be in a situation that you have a 2-year term that all of a sudden you have to have a huge balloon payment to pay off that note, but the interest rates are now higher. Yeah. So really understand the marketplace, what's happening, what you expect to happen when it comes to the interest rates in the future for the 1-year, 2-year, 3-year term. You may be wise to go a 3-year term. Yeah. Next is actually extensions. That goes into it. Look for extensions. I would probably
have the ability to
extend, but not for 1, 2, 3 years. I would probably do it with like maybe 2 6-month extensions, but also build in a penalty. If I'm representing the seller, I'd say that's great, but if you have to take on a longer term loan, that's higher risk for you. So build in a penalty, maybe a 1% increase in the interest rate. It's not going to really affect your return on the property in the long scheme of things, in the big scheme of things, I should say. But at the same time, it's a little bit of a reward for the seller for having to stick in longer.
It's got to work on both sides. Everybody's got to keep in mind.
Absolutely.
It's got to work for everybody.
And speaking of which, down payment then.
Okay.
And this is the last thing. Down payments. Your down payment typically on a commercial property is 35% down, minimum. With seller financing, you may be able to get into it a little bit lower. And some sellers may actually ask for more, 50% down.
Sure.
But at the same time, a lot of sellers may let you get away with 25%, 20% down, 30% down, not the 35, to make that sale happen.
Sure.
Again, go back.
Because they're going to make it on the interest rate.
They're going to make it up, exactly. But what you want to worry about is go back and make sure that your assumptions that you made, you're going to be able to refinance that in 2 to 3 years, that there will be enough appreciation so that you can refinance it without putting in additional capital, or build in reserve accounts so that you have that additional capital put in when it's time to refinance. So ultimately, those are the 5 main things I would think I would negotiate. You have, the term, interest rates, the down payment, and extensions, and of course, making sure that the person can actually give.
All great points. Financing. And again, as you're approaching a seller, make sure that you really take a look at their point of view and yours as well. So, George, thank you for coming in today.
You're welcome. Thank you.
I'm sure you'll be back again soon, very soon. You're a wealth of knowledge. And for those of you watching, make sure you give us a like. And if you haven't done so, make sure you subscribe.